Hello, this is Jordan, and this video is being recorded on Tuesday, June 15th, 2021. Thank you for joining me, and please like, comment, and subscribe if you're watching this on YouTube. In this video, I'm going to discuss what the markets could be telling us right now, which is there is a temporary peak in inflation. And I mean, that could be the narrative. So I have two charts as starting off. This is a chart I use with some various indicators of inflation. I look at TIPS, which is the inflation protected bonds against TLT. So if you divide that ratio, TIP against TLT, gives you a good inflation indicator. Looking at the 10-year yield, bond yields, industrial metals, the US dollar, and then silver against gold. And so last week, the CPI hit a 13-year high. But we know that markets are a discounting mechanism. They look forward, they anticipate. And if we're looking at these inflation indicators and action in the markets, it's suggesting that we've probably seen a peak in that narrative of rising inflation and rising inflation expectations. So it's not a surprise that that coincided with that news, because you see this all the time in markets. When a trend goes too far, you see news hit, and then the market reacts in the opposite way. So you have to follow the action in the market, not news. And, what we're seeing here is, I think most notably, if you look at bond yields, the 10-year yield, that's broken down a little bit. Also, industrial metals. Now, copper today, you can't see it in the chart because it isn't updated yet, but copper today had a big break below its 50-day moving average. It's been above the 50-day moving average for, essentially, perhaps other than a day or two, essentially for the entire last 12 months. So copper has been red hot for a while. Now it's coming off. It's fallen below the 50-day moving average. So that's an indication. Another one is if you look at the US dollar, that it's found support around, I think 89, which is, we'll see in the next chart, it's significant support. Now, one interesting thing is, given what's started to happen, we should see gold outperform silver. We haven't seen that yet. So silver has been holding up better than gold. Now, ultimately, I don't see that continuing. If these inflation indicators trend lower over the next few months, it's going to be really, really hard, and it wouldn't make any sense to see silver break out in that environment. So I'm sorry to disappoint the silver bugs, but that's my view, is that I could be wrong, I don't think silver is going to break out here. I think it's going to, ultimately, if we see inflation indicators push down further, then silver should underperform gold in that kind of environment. And here, we could say this might be the most important indicator for now, the US dollar index, and this is a chart that goes back decades, and there's a lot here to take in, but let's just zero in on the most important things. So there is a 15-year support level. You can see it there right around 88, 89. And so earlier in the spring, the dollar came down, had a bit of a rebound, then it fell all the way back down. But if you look over there on the right, you look at the candles in the last 4 or 5 weeks, you can see that there's lots of tails there where the market was trading lower. It closed the week off the low. In the last couple of weeks, the dollar's been able to push higher. So we do have a bit of a potential double bottom around, again, that's 15-year support around 89. And if we look at the momentum indicator at the bottom, when the dollar was really falling apart there in the mid-80s, in the early to mid-2000s, it's just a simple indicator I'm using there at the bottom, but you can see how far that fell. And at least recently, if we look at the last 10 years or so, that indicator came down to a level that usually has coincided with the dollar rebounding. So for now, it appears to me that the dollar is likely to rebound, or maybe it'll just be a weak rebound. It'll go sideways for several months. But ultimately, I think if we're looking out 6, 12, 18 months, the dollar is setting up for a big break below that support around 88, 89. I just don't see it happening right now, or at least this year. The indications are looking over the next couple of months, that the dollar, if it doesn't rally, it's at least stabilizing here. And if you look at the chart of some of these other inflation indicators, doesn't mean they're going to collapse, but it looks like they have put in peaks for the time being. So over the coming months, there is a risk that we have seen a peak in the inflation trade. So moving forward, if the dollar rallies, we'll probably see commodities sell off. If the dollar doesn't rally that well, maybe gold can do okay. Maybe it can rise a little bit. But in any event, if we're correct about this assumption, gold should outperform commodities. It should outperform silver moving forward in this environment. But again, if the dollar is going to rebound, you're probably going to see gold fall. You'll just see the other commodities fall more than gold, and that includes silver. So that's it. That's what you need to know right now. Check out all my work at TheDailyGold.com. Check out the links under the description, some free reports there. Consider subscribing to my premium service. Thank you for listening to this video. I really appreciate it. Let me know what you think, and I look forward to doing another video update for you guys in the days and weeks ahead. Thank you.